Hello there. Welcome back to EMS Grade 9. In this video, we are still working on the question paper of June 2018. In this video, we are going to look at question 6, that is on the general ledger. And the question reads, you are supplied with information from the books of Poly Traders for April 2018. Required to do 6.1 reads, post the following completed journals to the following accounts in the general ledger. We've got the bank, and then we've got the trading stock accounts. So these are the two that we're going to prepare. Then 6.2 reads balance the accounts at the end of April 2018. So we are going to go through the question and open these ledger accounts, and then we need to balance them off at the end. So we are given this information that we have here. So you'd see that we have got a cash receipts journal of Poly Traders for April 2018. Then we've got the cash payments journal of Poly Traders for 2018. So if you go to the other section, you see that we have got our accounts that we have there in terms of the general ledger of Poly Traders, which is the balance sheet section. We've got the bank there, and then also we have got trading stock. So we are going to start there with the bank. So remember, when we are opening these ledger accounts, we need to see if we have got opening balance. That is our balance BT, balance brought down at the beginning of the period. So if you go back to the question, you'd see that we are not given such in terms of the opening balance. If you come here, you'd see that we are only given the journals as in the transactions which took place during April. So we are not going to have a balance, opening balance in the bank account. We are only going to transfer the cash receipts amount and the cash payments amount. So basically, that's what we are going to do. So remember, the bank account is an asset account. Let's just maybe try to summarize it here. This is our bank. And remember, this is the debit side. This side represents the debit side, and this side represents the credit side. So assets, when they are debited, this is we are saying this is an asset account. So assets, when they are debited, it's a plus. When they are credited, it's a negative. So when we receive money as a business, that's when we debit the bank account. So whenever we have receipts, receipts come to the debit side of the bank account, and then we'll see that payments come on the credit side. So after entering this, that is, we are now supposed to balance at the end of the period. But what you have to take note is that whenever we receive money in the form of cash or of bank, in the form of check, we are supposed to debit it. And whenever we pay money, we are supposed to credit it. Whenever we pay through bank, we are supposed to credit it. So this is what we have. So we are just going to enter these transactions that we have. So you see that under cash receipts donor, we have got an amount of 19,050. So we are concerned about this total figure of 19,050. We are not concerned about the 10,800 and the cost of sales. And also we have got the amount of sundry that is here. So what it means is here, this 19,050 consists of sales 10,800 and cost of sales there 7,840 to make the total. And then we have also the sundry account. So basically what it means is if you add the figures that we have there, you are supposed to get the figure for our bank. So what it means, according to the figures that we are given there, it means if you add your figure that we have for sales and the figure for sundry accounts, they should give you the figure for bank. So what we are saying, if you say 10,800 plus 8,250, you are supposed to get your 19,050. So this is what we have. Then our cost of sales is just the cost of the goods that have been sold. So remember, we have got our cost price plus our markup, and then we get our selling price. So this is our selling price. So we are just representing in proportion the cost of sales being 7,850. So this is what we have there. So we're just going to post the figures as they are on the other section. So if you come here, you would see that now we have our bank. So let's just take note maybe of the dates. Remember, these figures, we are taking them from the journals. So we are just we are transferring them at the end of the period. We are in April. Yeah, so at end of April, that's when we are going to transfer those figures. That is on April 30. So that is going to be our date, April 30. So here we are saying April, 2018 April, then the date is what is 30. That's what we are going to enter there as our date. And then on the debit side here, we are saying total receipts. Total receipts. Total receipts. And then on folio, you just maybe represent in terms of where are you taking the figure for the receipts. You are taking them from the cash receipts journal. So just make an abbreviation here of cash receipts journal. Then the amount that we have there is we have got an amount of 19,050. So we are going to have our 19,050 here. And on our sales section, we just put 00. So this is what we have. Then we are going to pick up our total for cash payment journal and put it on the credit side. So if you come here, you'd see that the total for payments now is just beneath that on cash payments journal for Poly Traders for April 2018. We have got total payments, we've got 16,770. So we're just going to pick 16,770. So that's what we have there. We can just go there. On the date again, we're just going to use the same date, which is April 30. So if you come here, you are now saying on date, we are saying on date, we are just putting the same as 2018 April. This is April 30. On the details, we are saying these are total payments. Total payments and folio, we are taking the figures from cash payments journal. And the amount that we have there is 16,770. So these are the figures that we have. Then we are supposed to now balance. So remember, when we are balancing accounts, let's just maybe try to put it in steps of balancing accounts. Steps of balancing accounts. So you'd see that the first step that we have, you have to add the total of the debit side, add the total of debit and credit side. So after having added to get the total of the debit and credit side, you identify the bigger total, identify the greater total. Identify the greater total. So after you have identified the greater total, you put it in between, put the greater total in between the double lines. In between the double lines, both sides. So the greater total will come both sides in between the double lines. Then the next step, you find the difference between the debit, the greater and the smaller total. Find the difference. Find the difference between the two, and then the sides with the smaller total. That's where you're going to put the balance CD. Put the difference. The difference on the smaller total side. On the smaller total side. And represent it as our balance CD. So it will be your balance CD. Then the last stage, you have to put the balance BD on the opposite side. On the opposite side, below below the double lines. Well, these are the steps that we are just supposed to follow when we are balancing accounts. So let's just go to our bank account. So you see that there we do not have much entries on the debit and credit. We only have one entry on the debit, one entry on the credit. So what we are going to do is the debit side, has got a total of 19,050. We are seeing that the debit side has got a total of 19,050, and then the credit side you've got a total of 16,770. 16,707. So you'd see that the debit side is the greater side because we have got a total of 19,050. So it means this is the greater total that's supposed to come in between the double lines. So you come here, you put 19,050 in between the double lines. Then you find the difference between the two. That is now we are saying 19,050 minus 16,770. There you are going to get 2,280. So this is your balance CD, and it goes to the side with the smaller total. The smaller total is the credit side. So that's where you're going to have your balance CD. So you come here, you say balance CD. So balance CD's date is always at the end of the period, which is our period is April. So it means year date is April 30th. That's the end of the period. Then the difference that we got there was 2,280. So here we've got 2,280. And then the difference also will come on the opposite side below the double lines that is here. And balance BD, it will now be our balance BD. It will be now our balance BD. And balance BD's date is the first day of the next period. Here we are in April. Then our end of period was April 30. So the beginning of the next period is May 1. So we put the same amount as we are having here. This amount, same amount will come here. That's a start. Then we get your 2,280 here. So this is what we have in terms of the bank account. Then we can just go to the trading stock account. We have got a balance, opening balance being pre-entered of 2,465. Then we can go back to our journals to pick the figures for trading stock. So on cash receipts journal, you'd see that the figure that is affecting our trading stock, we've got cost of sales, goods that have been sold, 7,840. So we are going to pick this one and transfer it to the trading stock account. So the cost of sales is representing that the goods are moving out of business. So on the trading stock account, we also have the debit and credit. So we debit when we receive goods, and we credit when goods go out. Or when goods are sold. So here it means we are receiving, that's when we are purchasing. So this is what we have. So whenever we have sales, it means goods are going out. So we need to calculate the proportion of cost of sales and credit in the trading stock account. So we are going to credit 7,840. So we come here and say was credit side, we are saying date is April. Remember our date is 30. And on details, we are saying cost of sales. Then remember we are taking this figure from cash receipts journal. And then the amount that we have there is 7,840. And also we go to the cash payment journal. Cash payment journal is representing trade stock of 9,650. So this means we bought some goods, which is represented by this debit side that we are receiving goods. We purchased 9,650. So it goes to the debit side of trading stock account. So here we are saying bank. Remember, we are taking it from cash payments journal representing that we bought it through bank. So we have got bank here with details. Then our date is going to be April 30. And then the amount that we have is 9,650. And then here we are taking the figure from cash payments journal. Then I will do the same that we did there, that we add the total of debit and credit. We are now balancing. So we are saying this is the debit, this is the credit. On debit side here, we have put 2,465 plus 9,650. You are going to get your 12,000. You are going to get your 12,150 is the total of the debit. Total of the credit, we only want one figure there, which is 7,840. So you compare the two, you see that the debit side is greater total, which is 12,115. So it's supposed to come in between the double lines, both sides. 12,115. And then difference between the two, we are now saying this one minus this one. 4,115 minus 7,840, get 4,275. Then if you get this now, it becomes your difference, and you put it on the side with this smaller total. And side the smaller total is credit side. So that's where you're going to have our balance sheet, which is 4,275. Then the date is at end of the period. This date is also going to apply here, which is April 30th. You can just leave it blank. Then this total also is supposed to come here of balance CD, supposed to come here is balance BT now, which is 4,275. And then the date of the next period at the beginning is May 1. So this is what we have according to this video. Those who have subscribed, please subscribe and share. We're still coming with more videos. As for this video, I'm signing out.